All right, hey there. Welcome everybody. Christopher Franks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, the 13th, 2023. Man, oh man, how you guys doing? Coming at you live here from north of Houston, Texas on Lake Conroe. It is, like I said, February, or not February, Friday the 13th, man. Friday the 13th. I don't know if y'all are kind of superstitious and whatnot, but I'm not. So trading's all good. Everything else is all good. I've got more work that I can probably handle, but that's a good thing. LMT program kicked off. The mentorship program kicked off recently. And man, a week ago taught them my system, my day trading system. Absolutely amazing results we're seeing. Not just people getting, these great trades, but also, they're mentioning that it's saving them from taking poor trades, which is just absolutely fantastic. So I'll be sharing those comments probably sometime today or this weekend or something. The mentor program is something that's ongoing, guys, so you can feel free to join at any time. And you'll be able to get access to everything, of course. And you're not going to miss out on anything. You get a year from the time you join. You can get that. You can see more information. Now, let me go ahead and write this out for you guys just real quick. Let's see. howtotrade2win.com/LMT. So that'll get you there. By the way, we finally got the crypto plugin working again on the website. It wasn't working for a while. They hadn't updated it, but it works now. So if you want to pay for anything via crypto, we can do that again. There on the site, it'll be an option when you go to checkout. You got the option to choose, use Stripe or use PayPal. If you got PayPal and you have PayPal credit, you can use that. And then, of course, like I said, you can also use crypto now. Let me see here. We have this as well going on, guys. Don't forget, you can get 1 month of Tier 3 access. This is something we normally do, $200 a month, right? You can get it for $19.99. No auto-renew. It's done after the first month. That's it. But yeah, you can get your first month in there for that. And I'll tell you what, man, you're going to find more information in there, which you'll find anywhere. Everything else that you're going to get online, guys, and I know because I've looked through a lot of this, is basically just a regurgitation of the same stuff. Like somebody wrote something, everybody else just kind of copied it and pasted it, and then they all sell it to you. No, that's not what we do here, guys. I actually go in there. Everything is based on what I've learned and what I've done and how I've done it. There's no cut and paste from what somebody else is trying to sell you on their side or anything like that. So I think that's one of the reasons, again, why our members tend to stay with us for years and years and years. But anyway, yeah, so you can do that. That's part of my mission here this year, guys, to help 10,000 traders. 10,000, that's the goal. Become successful, consistently profitable traders. And so this is one of the things that we're doing this year for that. You can get this up here at, let's see here. I'm going to go ahead and type this in for you guys. You can get to, it's this page specifically, okay? And so I do this on every live stream at the beginning here. Let me go and write this out. Matter of fact, I think I might have put it under the description here today as well. But there's the link right there that you guys can jump on there. And one more thing, guys. Join us at themarketbreakdown.substack.com. That is my weekly commentary on the news that really matters, the things that are really kind of driving the market, my take on it, my explanation of how it works and why. If you guys are part of that, you've seen how well that works out. And often I'm seeing something different than the way that your mainstream media out there is going to get you, right? And it's almost consistently correct, right? And as well as we throw in some charts, guys. We look at things like maybe Bitcoin or the dollar. We look at stocks. We looked at Tesla one time. We looked at, Ethereum another time. And so we got all these different things that we kind of look in there as well. The cubes, we were looking at that. Give you some ideas on what we're potentially looking at, indexes, stuff like stock indexes, stuff like that. So, by the way, if you guys have not noticed, if you're not following me on Twitter, I'm starting to repurpose them to Instagram as well. For those of you that maybe have Instagram but you don't have Twitter, I've been writing these threads about trading, information about trading, tips, tricks, techniques, stuff like that. And people are seeming to like them pretty well. So what I'm going to be doing, I've been teasing this idea that we're going to launch a newsletter that's specifically focused on trading, right? Trading psychology, trading techniques, tips, tricks, stuff like that. And so basically it's going to be a deeper dive into these threads. So these threads kind of give you that basic information, things to make you maybe look up more information and get you, your head going right? But these newsletters are going to be like a deeper dive into it and some other thoughts. So be on the lookout for that, guys. I'll be mentioning that before too long as well. So there we go. Let's see here. Any trader worth anything would never cut and paste. Oh, yeah, I know, right? But I've noticed so many of these things. You guys don't understand how much money I spend every year looking at these different kind of, competitor things and trading systems and stuff like that. And you won't believe how much of it is just cut and pasted from somebody else. It's ridiculous. And yet everybody, is in there following along or whatever. But man, oh man, yeah, I always do all that. And I try a lot of the different kind of software and stuff out there. And I let our members know, if it's something worth getting or not. Or if you do get it, here's what it's probably good for. And it's not so good with this other thing. And so we're going to do a lot more of that this year, giving those kind of reviews. Just, again, to try and help you guys. By the way, be sure you guys are subscribed. Go ahead and subscribe to the channel here because I'm going to start popping out short videos. Just thoughts on the day, with the market, maybe stuff like that. But also those same threads and those same newsletter that we're going to have coming out or whatever, I'm going to be producing content for that on YouTube as well on this channel. So make sure you guys are subscribed. Go ahead and hit the like button, guys. I'd appreciate that. If you're on Twitch, subscribe to YouTube, man. I mean, I have this on Twitch because, some people are over there, but, again, we're going to be putting these videos out here on YouTube. It just makes it easier. I'll try and see if I can do it on Twitch as well. But, yeah. So, there we go. Who's here already? Bamboo, what's up, man? Phil Swanee's here. Data, Andrew Bennett, and NJ Wave Rider. Good to see you guys. Tell You Rider is here as well. Spiral Architect. Brian Riley, what's going on, man? Who else is here? Diego, what's up, buddy? Kimazabi checking in as well. So anyway, yeah, so that's what we got going on. Let's start. First things first, guys. Look at this. I'm going to go ahead and refresh this just to make sure this is the most current. Look at this. 92.2% probability that we're going to get a 25 basis point rate hike in, oh my gosh, in February. I can't think what it's called. I was sitting here looking at it. I still couldn't think of what that was. I can't read, right? But, again, guys, everybody is still set on this. Oh, but the Fed said. Oh, but the Fed said. You guys got to understand, the Fed always says. They always intend, right? They always mean to do what they say, and they rarely ever do it. I mean, think about it, guys. If you've been following me since the end of last year and the beginning of this year, at the beginning of this year, the very front of this year, I said, listen, I think inflation's going to peak out right around summer, a little bit before summer, right? I said housing prices were probably going to peak out, mortgages, stuff like that, all around that time as well. I said when we came to, to the Fed's hikes, I said we would probably see them hiking, probably get crazy in the summer and get the 75 basis points, maybe 100, but most likely 75. I was off a little bit at the time. This is back in January, guys. You remember this? I told you this, guys, here back in January, right? I said that I believed that we were going to see them do the 75 through the summer and probably end of Q3, beginning of Q4. So right around October or so, we were going to see them start pulling back, right? Well, they didn't. They kept on into February, right? Or I'm sorry, into November, right? But then what did we get last month? We got the 50, right? And now we're looking at a strong case for 25 in February, right? Which is the next hike. Guess what, guys? If the Fed is intent on doing 5%, that's just 25 more in March. So if you're looking at these probabilities here, again, you've got this potential flatter reversal coming in by summer, which is completely opposite of what the Fed said, right? But that's always what it is. Think about back in, when the Fed started doing the quantitative easing, the quantitative tightening, right? And I said earlier that year, I said, no, they're not going to keep being loose all through the end of the year, because they were talking about not doing tightening until 2024, right? Not raising interest rates until 2024. I said, no, they're going to do it starting in November. We're going to see that quantitative tightening starting there, coming in, and then, they're going to be raising interest rates there into the next year. And that's exactly what they did, right? I mean, this is, I guess what I'm trying to say here, guys, is if you follow me, then you know that for whatever reason, I seem to know what I'm talking about. Now, this last time, I've had a pretty great record here since 2018, calling the Fed on its BS with the rates, right? But, so this one I was a little bit off. But it's not, I mean, guys, come on. I said this, back in January? And I was off by, a month or two? With the 75 basis point rate hike, still continuing there, right? So, this I've started showing this because this is something else that kind of is along lines with what I'm saying, right? The market believes the same thing. Everybody says, "Oh, well, the Fed's going to do what it's going to do, and the bond market's going to cave." No, the bonds always tell the Fed what to do. The Fed is always playing catch up, guys. They're always behind because they're reading lagging indicators. You can look at things like when you talk about the CPI, right? So the CPI, the media, everybody's all, CPI, right? But the Fed for 10 years now plus has been looking at the PCEPI, not the CPI, right? But everybody's still, the CPI, right? But if we look at the CPI, a big driver of CPI is rents, right? The shelter, right? But what do we know? We know rents are going down, right? We know rents kind of topped out there and they're starting to pull back last few months. The thing is, you're not going to see that in the CPI because the way the Fed measures it is a big lagging is a big lagging way that they do it, right? So you probably won't see that really come out in the CPI for another few months at least, later on into this year somewhere. Because if you think about it, your rents, right, your contracts are updated yearly, right, usually, and then the Fed, the way they do it, is based on a long period of time as well, so that overlap gives them this extra long lag in it. So, and so you look at the difference between the PCI and the PCEPI is the PCI doubles down the rents, the value of the rents on the weighted average there, whereas the PCEPI is it's just regular. So you're not getting as much pressure from rents in the PCEPI, which is then a better indicator of what's going on. But nonetheless, that is dropping as well. I think the next reading on that comes in on the 27th of this month. So be watching that. PCEPI, okay? Consumer expenditures. Let me see here. What's up, Ryoshi? No, I don't want to make a Telegram group, man. Sorry, I've got too much going on as it is. We're not going to spread ourselves out 15 different, areas. We do our stuff on Discord because it's the best platform for us to get everything out that we get out in the way that we do it. So, yeah, I mean, it is what it is, man, So, yeah, guys, if you see somebody on Telegram saying they're me, asking you for money or whatever, do not give them money. Please don't. We don't do anything on Telegram. It's all done on Discord and our website, okay? So, there. Anyway, Esteban, what's going on there, man? Kimasabi, you said, yeah, I remember early 2022 when you were saying the Fed isn't joking, take them seriously. Yeah, a lot of stuff going on there, right? You guys are great. Anyway, so that's what we're kind of looking at here, guys. So here's the thing. Everybody is talking recession and whatnot. I really don't have any real strong thoughts on that. I think there's a good narrative that says if we do get one, it could be pretty mild. It's not guaranteed yet. And I think a lot of what would go toward that would be, we saw the Dow rally above its mid-August swing high. And that locked in that three-wave decline. So, three waves is corrective. And so now we're just looking for the S&P, and the NASDAQ to kind of confirm it by also breaking out above their mid-August swing high, right? So if we get those, I mean, there's little reason not to believe that we won't be going to a new all-time high in stocks there. And, of course, if we're doing that, Bitcoin isn't just going to sit down here by itself. Speaking of which, Barry Silbert and them and everybody, the SEC filing charges or whatever, Genesis and all that going on. And yet what's going on with Bitcoin? It's still rallying. Now, again, the way the bottoms generally work is that you get bad news and nothing happens. All right, give me a minute. I'm sorry, guys. Man, okay. I guess I got a little excitable there. I cracked my rib. Most of you, I think, know about that. And so, It's been weeks and weeks and weeks now, and it's healed pretty well, but it still hurts if I cough or if I sneeze or something like that. All right. Sorry about that. Anyway, where was I at? I think we're talking about all-time highs. Oh, yeah. Oh, silver and all that. Okay, so bottoms. So the reason why you don't usually get a continued drain downward when a bottom is forming is because there's just no more supply left in the loose hands, in the weak hands. Those who mean to hold it for a while have pulled that supply out of their hands in those bottom ranges, right? And so even though the bad news comes in, those bigger players that have different intentions than what you may do, they're not scared to sell out right away on news or whatever. They got longer time frames, longer trading horizons, investment horizons and whatnot. And so what happens is, what actually happens is there's just not enough supply to push price down. So one of the things you look for when you're at the tops is really great news coming in and it's really not moving up any higher. Or you're looking at the bottoms when there's really what should be really bad news coming in and you're getting limited movement down or none at all. So now, it doesn't guarantee, obviously, that the bottom's in at the moment here, but I think there's a great case being told, and we're about to look here at Bitcoin and discuss some of the things kind of going on with this, right? Let me see here. Marcel, what's going on? BTC to the moon and Lambos soon. Man, I haven't heard crypto Twitter talking about Lambos in a while. Andrew says, everyone talking recession, time to think we're bottoming. Yeah, quite possibly. Again, I don't, nobody knows for sure, right? But I don't think it's setting up for quite what people in general tend to think right now. What you're hearing a lot of, right? So, yeah. Dennis, what's going on, man? Yes, sir. I'm Discord, no problem, man. Yeah, we're doing that. We've been doing that for years. So, yeah, that's what we'll be doing. Let me see here. So, this is the structure here, guys, right? And so what have we done here? So let me kind of take this off so we can see a little bit better here. Look at this move, guys. We have a range here, right? This is the June range. This was the June low, okay? This is that June range right here. We have almost rallied into the EQ of that June range off this range down here, right? Now remember, I've been talking since June, telling you that I think it's likely that this is a bottom process here, that this is bottoming here. Now, some people, when this dip down here, kind of give me a hard time because they're not understanding what bottoms are. Bottoms are not the lowest price, folks. The lowest price or the highest price is just an event. The top or the bottom is a range-bound thing that's happening, right? And so, tops and bottoms take time to develop, right? So if you're at the top, it takes time to sell enough supply into the crowd, into the market, into the retail that are getting euphoric there at the tops. It takes time to sell enough into them to push them down to where they're not buying anymore and it can drop, right? At the bottom, it takes time sucking up everything they're selling into you before they don't really have anything, as I was saying a few minutes ago, to continue to sell into you, to push it down lower, right? So let me kind of zoom out to the daily here. So, this is what we're looking at, guys. Now, like I said, if we go back over here, that EQ right there, we got to pull this back over here, right? So we are right here, almost to the EQ of this structure, right? Now, again, now what else have we done? We've broken out above this local resistance. That's where we are, and we're trying to break out higher now. We've also broken out above this resistance from up here in March of 22, guys. This is almost a year-long resistance. We had a couple of hits on it, and we're breaking out of it, right? Potential wedge going on down here. And here we go breaking out, and we're breaking out on volume, right? We're breaking out on volume here, guys. Right there, right? And so that's, as we've gone through, you've seen this volume kind of pick up as we broke out through this pivot, right? I'm going to tell you guys, usually when you see this kind of breakout through the pivot and you see volume expansion and larger candles coming out through it and it rallies through the R1 and up into the R2, most of the time The lowest it'll go is back here around this R1 area, but it'll rally up through the R4, R5. And so you can see that over here. You can see that in play over here on the hourly. Look at the hourly, guys. Strong move up through. You see how volume starts expanding. Candle spread's getting larger here, right? Rallies up the R1, pulls slightly back. R2 pulls the R1. Boom, takes off. Breaks out above the R5, continues up higher. So, I mean, you see it right here. And here we go right here, right? By the way, I am working on a pivots course, guys, that I will be putting out there hopefully here in the next few weeks. And I think you guys will absolutely love it. As many of you may know, all I did was trade pivots for a few years back about, gosh, I guess getting right around the great financial crisis, right prior to 2010. And that was all I traded for that time. I wanted to learn how to do it really well. And there's so much that I learned from that you guys hear every once in a while, like what I was just telling you. But there's so much more to it that, man, it just helps your trading so much. But you guys be looking for that, all right? We're going to do that. I've also got another course coming out that's going to be all about moving averages. And it's going to be 50 plus different techniques. I'm trying to get up to 100 different techniques. I'm trying to count them out as I'm doing them here. Strategies of using moving averages. Then the goal isn't so that you guys go in there and you learn them all and use them all. The goal is so you go and you look, you kind of figure out which ones make sense to you. Which ones help you in your normal daily trading. That's the goal. The idea is to show you how you can use those moving averages to put together so many strategies. There's nothing like it out there, guys. I'll be the first one to do that. And I think, again, you'll love that as well. But, again, guys, this is a student of the market, right? I think everybody should be. But that's when I decided to become a real student of the market. That's when my trading changed. Back there in, what was that, right around 98 or so? After I got tired of losing so much money in the market for the first, 3 years. It was stupid how much money I lost. Had to do something different to make money, right? Otherwise I have to work for somebody for the rest of my life. Screw that. Let me see here. Silvio, what's up, man? Who else is here? Deadly123, always good to see you, buddy. Kimosabi had said, remember the 2019 yield curve inversion by early 2020, all but forgotten, then market sell-off. Similar to now, nobody is referencing anymore. Wait for it to revert for a potential sell-off. So there's something to watch as well. Hello there, Kaylee. Good to see you checking in. So what do we need here, guys? Excelsior, good to see you. So here's the thing. Is the bottom, is the low in or not? Now, there's nothing here guaranteeing that it's in at the moment. But that doesn't mean it's not in, right? Okay. So here's what I mean. As a trader, you're never going to know for sure whether something is doing something or not, okay? As a trader, the idea is you find these levels of where you look at this level and you go, okay, if it goes past there, then more likely than not this is going on. But if it doesn't and it goes this other way past this level, then more likely than not we're doing this other thing, okay? That if you want to be a trader, guys, understand that, okay? Trading is not about going in there and saying, okay, price is definitely going to go here, all in, that's it, boom, go. That's how you lose money. That is how you lose. I guarantee you will lose money left and right. And I don't guarantee anything, right? But I guarantee you're going to lose money left and right if that's your approach, okay? So as a trader, the idea is to understand at what levels does it become increasingly more likely this thing is happening? And at what levels in the other way does it become increasingly less likely? And so when you think of it that way, you can think of trading as being more or less correct. Not being right or wrong, just more or less correct. And that's important psychologically. Because if we're wrong, we tend to beat ourselves up. If we're wrong as traders, we tend to try to hold on to a trade, hoping it goes back so we're not wrong. You guys see what I'm saying here? So if you can understand it the way I'm trying to explain it here, it takes that pressure off you about worrying about being wrong, and you can get in and out of trades easier. You allow yourself to do that. Does that make sense? So here's what we're looking at. So, by the way, this structure, I've been explaining this to Discord over the last few days, right? It's been hitting our targets left or right. We've been putting in targets. It keeps hitting it. We'll put a new target in. Keeps hitting it, right? This move right here, this big volume, this large candle spreads, the barely, overlap there. This looks seriously like a wave 3. Okay? This looks like a wave 3 here. And so if you look at this as 5 up, 3 down, this gives us a 1-2. This looks, I mean, this is 1 up and a pullback. That's 2, right? And this is the third one up, right? There is nothing happening here yet that gives us, this is 10 days here. There's nothing here, 3, 4 days, anything like that, that would suggest a wave 4 has happened yet. So for me, I believe we're still in that wave 3. And so here we go with this here. And you can see I have an initial wave 3 target right here at 19,479.91. I've got my preferred target, which is the R3 pivot on the daily here, right there around 19,961 or so. And then an overextension a bit higher there, maybe at 2267. Okay? That's my wave 3 area. I'm preferring this R3 pivot to potentially that 2267 area. Because what happens is if we get that, guess what, guys? Let me show you some here. If we get the R3 there, look at the 38.2. We rally up, we come back, we retest this resistance as support, rally up higher. And we do it right around this blue, what was a resistance, what was a supply structure into it. It's now a demand structure because we're above it. So we rally up to that, or like I said, just slightly higher there at that 2268 area. And all of a sudden that 38.2 is this demand structure, and it uses this support or this resistance as support. Importantly, what that does is it gives us a wave 5 where our projected wave 3 has been. Ever since we got this as a 1-2 here, wave 3 has a minimum expected target up here at 2963. This gets us there. And we get the 3, the 4, that gets us a 5, minimum expected 5 up there around 22,000 or so, which gets us close to this area here. Now we can get an overextension along the way here and get us up higher, but right now this is kind of where we're looking at. We could potentially see it overextend up here to around 23,850, 850. But locally right now, we're trying to see, you know, we've almost hit that lower target. We want to hopefully see it hit the R3 pivot or the one above. And then we'll look for a pullback toward this red line here as support and break it out higher there. And then all of a sudden we start looking at 3 there, 4, 5. And then that just gives us then this idea of this 1. We'll get a 2 back into this support here now because we've broken back out above it. Rally up higher. I've been talking about the idea, again, if we talk about Wyckoff, the idea that this is where, you know, your selling climax is here. And then this, not a spring, actually would be a terminal shakeout. Really high volume, big push down. That was the FTX collapse, which again, it only dropped like 10, 11% below the low. Arguably the biggest thing to happen, bigger than Luna, bigger than Three Arrows Capital, all that stuff, that FTX thing. And yet, not much reaction downward on it. Again, I think, you know, again, you're picking up all that right there, right? You sell a lot of supply into that. That's what all this volume is. But what happens after your terminal shakeout is it builds a range below the other range. Because the terminal shakeout's scary. It gets everybody freaked out. And so it takes time to build that back up. So there's usually a range that forms, and then it breaks back up into the other range. And that's kind of what we're seeing here. So the idea of what we have in here is this becomes, you know, you've got your stopping phase, phase A here. Then you have phase B, right? And then you have this phase C. And then you have phase D here, this interior markup. Rally up here, we pull back. So you're going to get a show of strength up here, a pull back to your last point of support, right? And then you're breaking out higher here into your phase E, which is that exterior markup. And that'll give you your probably the pullback here and then the breakout here. That'll probably be your jump across the creek after we pull back. So we get a 1 up, 2 back, and then up. And that jump across the creek is going to be large volume, large candle spread because it's going to break out above this. I've got it drawn like this, but it's likely up here. This is the supply coming down on the market here. But the jump across the creek will be large volume, large candle spread, big candle breaking out through the supply. And that marks the end of of the accumulation or reaccumulation structure. So that's what I'm looking for now. If we can get this following up like this, that's what we're likely to see. And I think there's little reason to believe that the lows are not in. Now, structurally, coming off the swing high up here, right? This is all bearish market structure. This is a high, low, lower high, lower low, lower high, lower low, lower high, lower low. So what does that mean? That means we have to break out above this 25,214.5 area right here. That is your more mainstream kind of reasoning that the bottom may be in, because that breaks the bearish market structure of this downtrend right here. At that point, you're not in a downtrend anymore, technically. You're in an uptrend off that swing low because you break out above that last lower high. So that's really kind of the level that you should be looking at. If you're really looking for a more mainstream way of saying, okay, is the bottom likely in? Or is the low likely in? Yeah. Let me see here. Yeah, Fable Swana, you're asking what now? Oh, okay. I answered it? Okay. What's the inverse of catching a knife? Big Fade, what's up, man? Were you ever able to find the Bitcoin dominance chart without stables? I remember Korean Jew pointed it out on a live stream with you, but I can't find the ticker. You know what? I can't remember if I did or not. That was a while ago. I've had a really, really busy last few weeks here. Try to remind me by the end of this, and I'll see if I can find it and post something like on the social media sites that we have. That kind of that would point to it. That would show a chart on it and give you the ticker and everything. Yeah. Let me do that then. Let me see here. Mark, what's up, man? Late but made it. Unique Music, good to see you checking in. Backroom Property, good to see you checking in, man. Too much hopium here? I don't know. Again, people are pretty, if we get outside of just our own feeds, people are still very bearish, still talking about it has to go down. I mean, it could go down lower. This is what we're talking about, right? Nobody knows for sure, but completely ignoring what's going on here and saying it has to absolutely go down. But these various ways I've been showing you guys are ways to look at it that suggest, that when we look at them, they tend to signal bullishness, right? This isn't hopium. This is just, when you're trading pivots, guys, again, this is going to be part of the pivots course, right? When you're trading pivots and you're coming through the pivot like this, and you're expanding candle spreads, expansion of volume, rocketing through the R1 into the R2, most often, and nothing's 100%, but most often, you're going to get a rally up through the R4 or R5. Now, that doesn't mean we can't go lower, right? But here's the thing. If we do happen to break out above, this is that 25,214.5 area here. That breaks that bearish market structure here. So if we can break out above that and do what we did on the pivot, on the daily pivot with the weekly pivot, there's little reason to think that we won't rally at least up through the R5, at least. Now here's the other thing. If we look at the past history of Bitcoin and I don't have the exact chart with me, but if we look at Bitcoin and when the halvings were and whatnot, basically a year to a year and a half, somewhere right around there, before the halving happens, the bear market low is in. And usually what you see is a rally up and a pullback, and then it breaks out, right? No new all-time high until the halving. So, I mean, this would be kind of what we look here, right? We move up, we pull back, go up. By the way, usually from the bear market low to the halving, usually is at least 200% rally. So if we're looking here, oh my gosh, I got all this stuff here. Sorry, guys. So if we're looking here and we say, okay, well, we're looking for that 200%, where would that be? I mean, you're looking probably up here around 40, almost 50,000 or so, right? So the idea would be that you're getting this rally up and this pullback. What it's really saying is, for the most part, you get a wave one up and a wave two pullback. You get a wave one up and wave two pullback happening before you get to the halving. The having. Halving. But yeah, so I mean, historically, that's what happens, right? So I know everybody wants to say it's different now. Same things I've been pointing out. Bitcoin's never been tested in a poor economic situation, right? It came out as the great financial crisis had bottomed. It was stuff was starting to rally, right? And then Bitcoin came out, so it's only enjoyed the secular bull market. So I get it. We don't know how it's going to react or how it's going to act in a poor economic situation, right? A recession or something like that. So if we've got 5 waves up from that December, when it first started, right? Well, then we would probably expect further downside. Yeah, sure. But we don't know for sure right now. This is what I'm trying to get. Everybody's very, it definitely has to do this. And what has it done? Remember, when we got here and then here especially, everybody was like, we have to go down to 11,000, 7,000, 3,000, whatever, right? We have to. There's no way it's not. Well, really, when it comes to trading, guys, nothing has to happen. The only thing that must happen is that the market must do whatever it's going to do. And a lot of traders, professional and otherwise, get caught up in this idea that they're so convinced that what they think is going to happen that they cannot see the forest for the trees. They can't get beyond that. So they talk in absolutes. This has to happen. This is definitely going to happen. A lot of times online, guys, you know what? You get these really big accounts online and they really, and you wonder why, they're wrong a lot, right? And then you go, well, why the hell are they being so loud? They're so wrong. They were so wrong. Last time, at the very top up here, they were telling us buy, 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 buy. Down here, they're saying sell, 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 sell. And they're always wrong, right? They're always wrong. Here, they were like sell, 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 right? Because you have to understand, most of these really large accounts are not really traders, guys. They're not. They're not traders like me or probably even like a lot of you, right? Like where they're really putting a lot of effort into it. Their job is influencing. And it's like no news is bad news, right? The idea is that they get attention. And if they go out there and they be really strong about like right here, right? They say, it's definitely biggest bear trap in the world. It's definitely going to go down or whatever. It doesn't matter whether it does or not. They're being so vocal about it that everybody's talking about them, that more people are following them. And guess what? They can charge more for advertising. They can charge sponsorships more, stuff like that. And so if you ever wonder why that happens, most of the time that's the reason why. Sometimes, they're just young traders, young not age-wise, but just to trading, right? New to trading, really. And they haven't gotten to the point where they understand that these things that they're trying to do, you can't really do, right? Guarantees and stuff like that. But for most of them, influencing is their job. So it doesn't matter whether it's bad news or good news coming at them. The fact is their name is in your mouth. And you're going to talk about them. And everybody else is going to talk about them. They're going to share and they're going to share. And people are going to get curious and they're going to come and follow them, making them more money. Okay? So in case you guys were wondering about that, there it is. But yeah. So, man, crazy stuff, right? So yeah, background. Yeah, I don't know if you're just talking about just locally shorting or if you're talking about a big short for below the swing, below the 15,000 or whatever this is low here. What is this right here? Yeah, 15,460. But yeah, I mean, even if it is that below that, you could be right? And I'm not guaranteed that these are going to go up, but I'm saying that, listen, when we look at these different ways, these different techniques, these different strategies of trading, most of the time when it does this is what happens, right? And that's what I'm trying to get across to you guys. And we're having a confluence of these factors at the same time, right? So that's this confluence, right? And the idea is you should be paying attention. It doesn't mean you have to believe it, but if you ignore the confluence of these things, and maybe you don't, as traders, you guys don't know all these things I'm talking about, right? But again, I bring them up because these are the things that usually this is what it means when these things happen, and we're having them all happen at the same time, right? Which to me adds confidence. It doesn't. What I mean by adds confidence is it means it's likely more right than not, right? Doesn't mean it's definitely right. It doesn't mean like, oh, I'm so confident I beat my chest kind of thing, right? It just means that when you look at the trade, it's becoming more likely than not that thing is happening, right? And so that's what I'm trying to get across to you guys. For when we look at that, right? The signal noise ratio on crypto Twitter is paralyzing. It is, yeah. Madoff talked in absolutes. He did. Yeah. Oh, gosh, guys. Sorry, give me a minute here. Sorry about that. Wanted to get that in case I yelped out there. That was a big sneeze coming on. Oh, that hurt. I didn't want that coming out loud in your guys' ears there. Sorry. Okay. Oh, all right. Here we go. Eriquin, what's going on, man? He says, if when stocks hit a new all-time high, do you foresee a scenario where we get a melt up into a super cycle top, then a bust thereafter, or is that still a few years away? Sorry if you always answered this before. Yeah, well, that's my conundrum at the moment. All right, so my thought process right now is it's a couple of split decisions, right? It looks like a bottom may be forming, a low may be in, and we may be headed to a new all-time high, all right? I don't know for sure, but it looks like it may be. So that's the first thing. Either it is or it isn't, right? Now, if it is, the second thing is, do we get a blow-off top coming this year? Is this just wave 4 on the low here and wave 5 is going to be this blow-off top, right? Or do we get an extended move up that takes us into 2025, 2026, something like that, finishing some larger fifth wave into a blow-off that way? I don't know. I honestly don't know. The worst case scenario is if the low point is in, you can bank on the first, and if we still continue up, well, then you've got the second, right? I wouldn't immediately assume that it's the second where we're years out from a new all-time high, a big new all-time high, right? I would go with the first, which says we could be seeing some sort of melt up, that leads into a new all-time high blow-off, which completes that super cycle top. Remember, guys, that was my big reason. Right, guys? So let me kind of pull this up here, this chart. Let's see here. We'll look right here at the Dow Jones, right? All right, let's kind of get up here. We get everything else turned off here so we can see this, concentrate on what we're looking at here, right? So here's the thing. This is what I was talking about. We have this overlapping ending. It's no blow-off top, right? I've been talking for the last few years about how I thought this top coming off is going to be a super cycle top. In an Elliott wave, it just means it's a very large degree fifth wave, which means you have a fifth wave of a fifth, which means in progress would be a fifth wave of a fifth wave of a fifth wave of a fifth wave. So you've got all this fifth wave stacking on itself, which should psychologically have the market overexcited, right? Euphoric as hell. And that's what gives you the big blow-off tops. But we didn't get a big blow-off top here. And that's why when we were down here, I was like, man, that's why you guys have been watching me. I've been like, I don't know. We're not having that blow-off top. I don't, it's not that it has to necessarily happen, but we didn't get it. And so that makes me cautious. And now we have this move down, right? With this like 1, 2, 3, 4, 5 kind of thing coming down, right? And then we got 1, 2, 3, 4, 5 here, right? So it looks like an ABC, and we broke out above it, which would confirm that as 3 waves down, which is corrective, right? Now, that could mean a lot of things. If this was some sort of wave 4, that could mean a triangle's playing out here. I think I talked about this last time. Or it could mean that we've got a flat, so ABC down, ABC up, and then 5 more down, and then break out a new one, right? What would drive you all crazy if we went sideways for most of the year, right? Triangle or flat kind of thing. But this is the key. I think this is the key right here. This is, again, at this point, it's ABC. So if the S&P and the NASDAQ follow through, then they're confirming that. And when you have the indexes confirming, things usually continue in that direction, right? So if and by the way, you see here on the daily, right? Broke out impulsively above the daily. We're rallying up here. I mean, the idea is we should get a rally up into this area and then a pullback to the pivot and then a breakout, right? That pullback to the pivot should be about a 50% retracement. If we can get up here, let me see. Look at that, 50% right there at the daily pivot. So what that means, because again, you know, and again, this is all going to be part of that pivots course I'm going to release, guys. But there we go. But what that usually means then is we've got a 1 up and a 2 back, which means we got 3, 4, 5 still to go, right? This right here is pretty huge. So does this become like an ABC? So now we got ABC, ABC, and then 5 down toward here again, and then the rally and breakout? That's a flat. Or does that mean this is like a 1, 2, and this will be a 1, 2, and then we have a 3 of a 3 breaking out to the new all-time high, which is what you would expect. Your third of a third wave, your third wave of the third wave, is usually the point at which you're breaking out through significant areas of resistance. Long-term trends, all-time highs, things like that. So, I mean, if we happen to get this, say, right here, right? We get that pullback. I mean, we're getting 5 up here around 37,293, which gets us right above the all-time high. And so that becomes, you know, again, this 1, 2, and then maybe a 1, 2. So then 3 of 3 is the big breakout. So again, you know, a lot of possibilities here. I think a lot of times traders want to know, well, what's going to happen for sure? Don't believe anybody that tells you what's going to happen for sure. They're either going to get it right or they're going to get it wrong. You can't do that. You just, when you're looking at the market, whether you're a trader or investor, you have to understand at what level do things become more likely to be what you think or less likely to be what you think. And then you have to trade or invest accordingly. And that makes it more difficult. But trading isn't easy, guys. It's simple, but not easy, right? It's simple because really all you're doing is moving between levels of support and demand. Supply and demand, support and resistance, you know, things, support, resistance flips, things like that, right? Liquidity. That's what you're doing. You're moving through areas of liquidity. But your emotions, your impatience, these things are really, the mental side of it is the tough part. That's the toughest part. And it's going to take, it takes a while to get through it. But that's the reason why you end up losing a lot of money. Most of the time it isn't because you can't pick a direction. It's because you don't know what to do once you know the direction or once you have the direction. You don't know how to position your position size correctly. You don't know where to put your stop loss correctly. You don't know what things you should be looking for, how you should be looking at it. And so you jump from system to system to system, trying to hopefully find the Holy Grail, right? Again, I keep talking about 2017. If you guys were in Bitcoin or in the crypto market back then, and you saw the perfect example, every week or so, it was something new. Elliott Wave, Wyckoff, ICP. I mean, all this stuff, right? All these different ways of doing it. Every week or two or whatever, it was a new one, right? So traders would come on and they'd half-ass it for a day and a half and then go, oh, it doesn't work. Well, they never learned how to do it properly. And once they learned, and even if they did learn to do it properly, they didn't practice doing it properly. All these things that you need to be a successful trader, they weren't doing. You need consistency. You need practice. You need discipline. Most of these things people are not willing to do. And if you're listening to this, you might be some of those people, right? This isn't telling you don't need to be a trader. This is telling you, listen, this is what's going on. And if you want to be a successful trader, a consistently profitable trader, then these are the things you need to work on. And nobody can do it for you. There is no magic system out there that will do it for you. You can have the greatest system in the world, but if you can't work through the emotional and mental side of it, if you're not disciplined, if you're not consistent, it will not work for you. You will still lose money. That's why it's so hard to give guarantees. You know, for what we do, right? Because we can't guarantee that you are going to do what you need to do. We can do our part. We can guarantee our part, but we can't guarantee your part. So hopefully, hopefully that resonates with you guys so you understand, what's required. It's not easy to make a living as a trader. It's simple, but it's not easy, especially not at first. It can become less difficult the more you learn to do things correctly, the more you practice them correctly, the more disciplined and consistent you are. But that's like anything else in life, guys. I tell you these things. Everything I talk about in trading is life. If you don't handle your life with consistency and discipline, how are you going to handle your trading with consistency and discipline? You cannot divorce the two. You absolutely have to do it. Now, the good news about this is if you get that, your life is about to become a lot better. If you get that and you work toward that, your life is going to become infinitely better. And you'll be like, holy crap. What the heck? Why couldn't life have been like this all the time? Because you weren't doing the things you needed to do. Life happens, but there are things you can control about what happens, right? There are things that you can control. And those are what you should be controlling. But instead, we tend to focus on the things that we have no control over. And then we go, oh, well, we don't have any control over it, so it's going against us, and I'll never be able to do what I want to do in life, and blah, 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 right? Fiboswani says, we have models at work, and it is not their performance that is key. It is the risk management with the information you have. Yeah, exactly. Tell you when I was referring to the traders, says 90% of them ended up at TA doesn't work. Whales. Yeah, exactly. And I know we kind of laugh and giggle a little bit about it, but, it isn't making fun of anybody. It's just, this is the reality, guys. And so you have to decide, as in life, are you willing to do what it takes to make you better? Are you willing to do those things that you have to do to become successful? Most people are not. Most people want to lounge around and complain and not try. And it makes them miserable. There is something about putting effort into something that as human beings increases our confidence, increases the way we feel about ourselves, our self-worth, makes us happier, less depressive people. There's just something about putting in that effort. Let's see here. So this is what we're kind of looking at here, right? So what did I say? I said we're looking for, we have this breakout above this mid-August swing high, right? So let's see here. We can look at S&P E-minis here, right? And so that same kind of thing we're talking about here is right here. It's that same area, right? So we haven't broke out above that. So this still potentially a 1-2, 1-2. The big term here, right? But notice right here, I've got this, it looks to me like a 1-2 here, heading up. So I've got this count. I've got the main count coming off the top here, but I'm maybe about to change this interior count to give this an ABC. We kind of get confirmed on that if we break out above that swing high right there. Same thing. Oops, did not mean to do that. Same thing with, let me see here, the NASDAQ, right? I got the composite here. There we go. Let's kind of click this off so it's easier to see or to read everything here. But again, same idea. Let's kind of get this over here. That's your mid-August swing high here, right? You'll notice that the NASDAQ is lower than the S&P, which was lower than the Dow, right? Again, this is what we're talking about. Because tech has taken the biggest hit, right? It topped out. Remember, the NASDAQ is tech heavy. It topped out here in November. The S&P and Dow didn't top out until January. And so it's having a little bit more tougher time heading up, right? It looks like we could roll over and head down lower. It's possible, right? But right now, it's the same idea. This is a 1-2, maybe 1-2, right? Or it's a ABC 1-2. Get ready to move out here. But again, it's that whole idea of we need that breakout above that mid-August swing high that locks this in as what looks to be three waves down here and heading up. If we see that happen on the S&P and on the here on the Nasdaq, I'd feel a lot better about the idea that we're coming to a new all-time high. Until then, the Nasdaq and the S&P are divergent from the Dow, and in the divergence usually indicates that, you know, in this case, that it would continue lower, right? But confirmation, getting them to break out as well, would confirm the Dow's breakout, which again is that much broader based blue chip stocks kind of thing, right? Which is why, you know, it's a lot less tech heavy, right? And so it would confirm that breakout and that move higher. So that's what we're kind of looking at here, right? You went into ChatGPT, you told it to write the best 5 words of a successful market trader, and it gave you disciplined, adaptable, risk-aware, informed, and confident. That's awesome. That's awesome. Let me see here. So let's run through some charts here real quick, guys. Oh, I wanted to look here. Yeah. I wanted to look at, where are we at? Copper. All right. So if you know anything, you know, they call copper Dr. Copper, right? Copper is basically the leading indicator for the economy, right? Because so many things use copper, right? So if the value of copper is rising, it's this belief that it's being used, right? That the supply is being used, so the demand is greater, right? Look at this right here. We are getting a big impulsive breakout above that weekly pivot. MACD is crossing back up above the zero line. This right here, I mean, this looks like we're going to rally on up higher. So if copper is rallying up, that should indicate that the economy is still not overly weak. That the demand is still there is what we're looking at, right? And so if we look at it that, then it brings us to that idea of, well, maybe if we have a recession, it might just be a mild, slight kind of recession. Maybe. No guarantees, obviously, but watch this. So the idea is we're going up, and right now, if we're breaking out above higher, I mean, I've got targets of 6.2435 and 7.89. Those are my 2 targets right now if we're going to get this breakout here, right? If we zoom in a bit, I mean, this rally off here, right? Looks like a series of 1-2s coming in before the breakout. This potentially becoming 3 of 3 or something here, right? So again, the idea is that we would rally, getting a breakout above the pivot like this, the idea is we're going to rally up to the R1, which is near the resistance, right? The previous swing high. And if we pull back, that should give us a 50% retracement toward the pivot. 50%, right? Right there at the pivot. That's what we'd be looking for. So, I mean, we could see a pullback here and then rally up higher, you know, a retest of the pivot as support. But ultimately, I think we're headed up here toward this area. And at that point, I think that's a 1, that's a 2. Boom, we head up higher. So a lot of play left in copper if that's the case. And you know, if copper's still rallying, again, it's in so many things. If copper continues to rally, people are buying it. Why are people buying it? Because they need it. Why do they need it? Because there is demand for whatever is being sold. And if there is demand, it's hard to see any kind of strong recession going on, right? I mean, if you guys want to talk fundamentals, there's fundamentals, right? So we'll see. Phil, have a great day, man. So definitely, you know, just different things we look at. You guys know I'm a chart trader, right? I don't really worry a whole lot about fundamentals. But I hear a lot of bad takes on fundamentals. And so we try and explain fundamentals through charts, right? Because again, at the end of the day, the way that I believe the market works, the way that I've been able to do it so well, is because I believe that the social, right, the social mood, it shows up in the charts. There's a social mood, and that determines whether people are buying or selling, which shows up in the chart. It's not that the chart goes and then people go, oh, I want to buy or sell, right? It's that in general, people feel a certain way. They either feel positive or negative. And that's shown in the charts. And so your news is always in the charts. That doesn't mean you can always understand it correctly at the time. We make lots of mistakes. We're human, guys. We're human. And we don't know that it means that, oh, on this day, this specific news event happened and that was in the chart 3 months ago. No. It just means that at that point, something was happening that coincides with the chart movement. You kind of expect that something would happen. Maybe something along those lines would happen at that point because of what the chart's showing, right? Again, when you look at the Russian index, it kind of let us know when the, that Russia was likely to invade Ukraine, right? And it had done it previously, right? Just based upon the charts, right? And the way that we read them. Well, there's a lot into that. But anyway, so I mean, yeah, locally on the weekly, it looks like we're heading up. And if we do get from this swing low to the R1 pivot, that 50% right there, I mean, that's exactly what we look for. 1, 2, 3 up higher, right? Monthly, we're just starting to break out of oversold down here. Look at those monthly candles. Look how great those are. And from this point, I mean, where's the swing low here? 19,725. 19,355. Yeah. So, I don't know. Is this a triangle here? Is this maybe like an A, B, C, D, E? I don't know. I think it would be likely that this would be more of a 4, and you got a 5 still going, right? But this, I mean, if that's the case, then this becomes 1 as a flat, right? A, B, C, and then 5 down here, right? 1, 2, 3, 4, 5, right? Potentially. I mean, just looking at this real quick. I haven't even looked at this part of the chart. I'm just now counting this with you here. But yeah, I mean, so, maybe this is 4, right? I'll have to go look at some charts. This is only the futures chart. This isn't actually the full copper chart, right? This only goes back here to whatever, 88 or so. But yeah, that could be a 1, 2, 3 triangles of 4. And even though, if this is a triangle here, even though this dips down into 1, all you're looking for is the triangle itself completes above wave 1, right? So it's not an overlap. Yes, this overlapped with 1, but if this is a triangle here, the swing low of that the wave E of that triangle doesn't dip into wave 1. So it's not an overlap, right? So you get like this 1, 2, 3, 4, and we got 5 going up. So yeah, I mean, those are my initial targets, 6.2435. If we break out above that, it's 7.89, and then there's going to be a higher target above that. Probably one more target above that. So yeah, I mean, again, if copper's continuing to do it, then, there's little, when it comes to the economy, let's do this. Let's look at Dow Jones, right? We compare it. What do we got here? There's copper. There is mark there, right? So if we're coming off of 98 down here, right? Rallying up, pull back, rally up, pull back. Market rallies up. We're just going sideways here. And again, if this happened to be a triangle here, it's lasted through this last bull market, the secular bull market. We've had a triangle in copper. Well, most of that here, right through 20 here, right? And then if we're getting this push up higher, again, that takes the market with it, right? So we'll see. We'll see how that all works, guys. But definitely something to be paying attention to. You were looking for what? Sol? Yeah, so Sol popped up a bit higher here. I mean, look at this. It rallies up into the R1, pulls back, doesn't even get down very low, rallies back up and breaks out again. See, we're looking here. Oh, I gotta zoom in a little bit more. I gotta see where that. I hate these candles like this. You can't tell where they if they rally up after the low or before the low. But you gotta know. After the low. All right. So after the low, that makes this a 1, 2. See the 1618 up here? 3, 4 maybe. And then we get maybe a 1, 2, 3, 4, looking for a 5 up here. $18.84. That'll get us right around this swing high over here, this resistance. So if we break out, that's kind of my next target right there, with the idea that maybe we've got a, oh, actually, you know what? We can go 1, 2, and then 1, 2, 3, 4, 1, 2, 3, 4, 5. Yeah, now this aligns more with what we're just seeing with Bitcoin. Third what? Working up to finish that third wave, right? That third of a third kind of thing. I mean, so you're looking at the same thing here. You go, okay, well, there's 1, 2, right? And then right in here, you're getting this 1, 2. And so that gets you a 3 and a 4. And then now, you're looking at 1, 2, 3, 4, 5, right? So kind of like what we're looking at with Bitcoin, I guess, right? More or less, something like this maybe. And then that would give us a pullback. If that's correct. We're looking at the weekly, so we could be missing some interior things. But I mean, this makes sense. 38.2 right here. Right back where this resistance is. Find it as support. And then that gives you a wave 5 up here around $20, $21 right before it breaks out, right? And so then you get a 1, 2, 3 on your pullback. I mean, that's what we would normally expect. We'd go 1. Initial target is wave 4. And popping out higher. Not where those are, but just, just going higher on that. So this then changes a bit, right? But that aligns pretty good, right? So, yeah, I mean, it works pretty good there. I think. I think it's set up pretty well there. Your biggest bit of volume so far is 3 of 3. Well, 3 of 5 of 3, right here, right? And this 3 of 3 is right here. So in that area, as you're getting toward the end of wave 3, you're everybody kind of in there, right, pushing up higher. So yeah. So I haven't looked in here. Obviously, we're just going by what we saw out there. So maybe it doesn't pan out, but I don't know. It looks like 1, 2, 3, 4, 5 here. ABC. Could be a leading diagonal going on here. ABC 1, 2, ABC 3, 4. We'll get an ABC 5 maybe. And that gives us a 1, 2. Or 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4, 5. And so we could overextend a bit on here. If that's 1, 2, we get a 1, 2. Oh, I mean, yeah. If that's 1, 2, and this is 1, 2, 3, 4, 5, 3, 4, 5. I mean, it gets us that if this is 1, 2, wave 5 is up here around that $20 area. I'm sorry, the $19 area, which is where we are with our minimum expected wave circle 3 up there. Right? Let me see here. OP, is that what you're saying? I don't even remember. Did I do that? Oh man, you're asking for something back in October. Wow. Oh yeah. I mean, it looks good. I don't remember what I said about this back then. Let me see here. I mean, so yes, that would be a 1 and then a 2 here. And then potentially a 1, A, B, C. Here's a flat maybe. Looks like 1, 2, 3. So, 1 and then A, B, 1, 2, 3, 4, 5 is C as an expanded flat. Your memory is long. I can't. So 2 is what? 2 is the top up here, right? Yeah, I mean that looks good. Yeah, I mean here we are rallying through to the R5 pivot. I mean I'd at least look there. Let me see here. I mean, you would have a 1, 2 here, right? And then you have a 1, 2, 3, 4, 5. Yes, I mean, so you're looking at, basically 1, 2, 1, 2, 1, 2, and then 1, 2 here, 3, 4, 5. Yeah, I think we might be getting to the end of this one right here. I think we probably have this kind of thing going on. Maybe like that. And then this would be the other 1, 2 here. Does that get us the 1618? Sure does. So we could potentially look at this as 2. Let me see here. 3. I mean, just back into it. Depending on where this stops, it may, let's say it goes all the way up here to the 2.0, which is that secondary target we usually look for wave 3. If we can get to that 1.67 kind of area, I mean, then you pull back right here about 1.365, which just takes you right to this previous resistance. Makes sense. See, when we're doing this, we're saying, okay, well, here's where it would pull. Does that make sense? And it does. I mean, you pull back to the previous resistance here as support, right? So you rally up just a bit higher into this resistance, right? That's where you're getting right up here. Reject it, come to this support, pop up again. Let's see here, up here around 1.856 or so. Let's see, that gives you a 5 there. And then, let's see here. So that's that one, right? Oh, wait, no, that's that one. There's this one right here now, too. This can't be a 1, 2, 3 as a leading diagonal because this would be wave 3, and wave 3 can't be a diagonal itself. Okay? So wave 3 has to be impulsive, but this wouldn't be impulsive. Actually, it would. 1, 2, 3, 4, 5. Oh, okay. So it's possible this is 1, 2, this is 3, 4, and this will get you 5 up here. That's the other possibility. Just glance at this real quick. I got to go pretty quick here, so I don't have a lot of time to really delve deeply into it, but this would give you, if this is a 1, 2, and this is a 3 up here, that'd get you around that 3.0 extension. But, yeah, I mean, this could be just a leading diagonal out of here. This could be 1, 2 right here. 1, 2, 3, 4. 1, 2, 3, 4, 5. And that gets us up here. So, I mean, yeah, I think it's possible that we could get this rally on up here toward this R5 pivot. And that might just give us that one. But it's just, in that case, this would have to be a 1, 2, 1, 2. Man, and so, again, when we think in terms of a breakout higher, I mean, when you have a 1, 2, 1, 2, that 3 of 3 is that breakout, as I was talking about earlier, above the all-time high here. So we could see something quite significant of that. I think I'm going to change it to that. See here. Well, let me do it this way. No, that's fine. Give us a 1, 2. Give us a 3, 4. 1, 2, 3, 4, 5 gives us a 5, which ends up being, I got to change that one more time. Yeah, so I think right off here, without really kind of doing any kind of deep, real analysis on it, I think we've probably got a 1, 2, 1, 2 setting up here. Oops. There we go. And so, you know, we could see 5 overextend higher here. Yeah. Let me see. Let me kind of see this a little bit easier here. Yeah, I mean, this still got higher to go here. I mean, if we zoom into the 12 hour, this is a 1, 2. This is 3. We're hitting the overextension there, so we'll probably get a pullback sooner rather than later and then up. So yeah, I could see some potential overextension, depending on how long it takes, at least toward that 1.85 area, potentially up here toward, you know, I'd probably use pivots after that though. I'd probably go, you know, R4 here at $2 and then R5 up here at around 2.2, 2.25 or so. But yeah, R2. Weekly R2 is 303, you think? Let me see here. Yeah, around that. Yep, maybe. Yep. I mean, I'm even more encouraged when I look at you look at the weekly here. Look at the expansion of volume, large candle spreads, very little overlap, breaking out through the pivot. We should be looking, and the R1 pivot's almost, we should be looking for that area as the target. And then if we kind of pull this back, right, and we go, okay, well, here's 1, 2. You know, like I said, 1, 2, 1, 2, right? 61.8, 50 to 61.8 is usually retracement we look at the pivot, right? Because it's 1, 2, 1, 2, if that's the case. Oh, man. Actually, it'd be 1, 2, 1, 2. Oh, yeah. So it'd be 1, 2, 1, 2. I just didn't have the stuff. Let me make these show up on these intervals here. I think he's looking exactly what I'm looking at there. Yeah. So, you know, again, it'd be this idea of a 1, 2, and then, you know, 1, 2. And look at that, too. Pulls you right back to the dang weekly pivot. I mean, that makes all the sense in the world. 1, 2, 1, 2. Boom, rally. I think we're probably going to hit R5, at least. If we look here, 1, 2, 3, this is wave 4. So based on the height of wave 4, at least 3.2. But I think, you know, obviously I think it goes higher than that. But I mean, based on the height of wave 4 here on this logarithmic chart, 3.25 or whatever is minimum expected wave 5 target. Again, you have 1, 2, 3, 4, working on 5, right? The only other thing I could think of is if this is 4, maybe this is A, B, C, D, E. A, B, C, D, E as a triangle, maybe. Well, I mean, if it is, that gets us up to 3 and a quarter. I would be looking probably, if you're looking long term, I'd probably be looking around 320, 325 initially. Because that would suggest, again, this could be, you know, if you measure out the height of wave 4 here, that gives us wave 5 right around that. And then if we look at this being a triangle, A, B, C, D, E, and this being wave 1 up, wave 2 pull back here, I mean, we get that 3 point, you know, same area right there, 3 and a quarter for the 5 waves up. So yeah, I think there's a good you know, a good possibility on that. Yeah. Oh man, yeah. So we can just kind of change all this and we can go can go 1, 2, 3, 5. And then we can go within that. You know, clearly we've got a 1, 2, 3, 4, 5 here. And then here, we've got maybe a WXY or an ABC, whatever it is right here. And then an ABC here. And that clears that up instead of it being 1 with a flat. C, D. Oh, yeah, I think that's exactly what it is. See, sometimes it just takes a little bit to look at it, guys. It doesn't take a lot of time. But as you know, you start local and then you kind of zoom out and go, okay, well, does that make sense? Well, it looks like something else could be happening, right? And so, yeah, again, locally here, 1, 2, 3, 4, 5, probably getting up close into this range up here. Maybe something like that. Yeah. Where are we at right now from that Roman numeral 1 and circle 1 and 2? And we're more than 4618, but if we change this to the fib levels based on log scale, we're right around there. We're right around that 4.618. So yeah, you know, again, I think maybe we're probably pretty close to topping out at the moment. We'll have some pullback. This makes sense. Look at this, 38.2, right about 1.335 or so. That's the R2 pivot here on the 3-day, which is the resistance right here. Look at this. Resistance, support, resistance, resistance, resistance. There we come. So we get a 4 there. That'll get us a 5 then if that's it. Up. Yeah, it gets us pretty close up there. It gets us at least around 1.78, 1.8, somewhere right around there for that wave 5. And then it just becomes, you know, this whole idea of, well, where's the pullback? So the pullback then on this here, so if we can get that. Yeah, so 50% is at wave 4, which is what we usually look for as far as our first target goes, right? Look how magic that is. Oh, I need to get out of here. Let me see. So that gives us a 3, maybe around 2.835. 4, retest the resistance as support. 5 up there right around 320. Yep. I think it's probably what we're looking at. So you could, you know, if it breaks out higher here, it goes a bit higher there, and then, you know, you short it on down and then potentially long it back there. Do I think any of the SEC noise kills the markets anytime soon? Why hasn't it killed it yet? The market's quick to jump, right? When there's bad news or good news, right? But we aren't seeing it. We're seeing the price continue to rally up, right? Again, we talk about like Genesis and what's going on there. Everybody's been so worried about it, right? But what's going on? We're rallying still. Even that stuff was mentioned yesterday. We continue to rally today. Yeah, I don't think so. I think the markets seem to be saying that, you know, if retail's worried about it, well, retail doesn't have enough supply to do anything to make the markets change what's going on. Right? The market's just overall, you know, more bullish than bearish. That's what I think. We'll see what happens, but yeah. Bamboo, man, sorry I missed you leaving out there. Have a great day. Anyway, guys, so there we go. There's some thoughts, right? Don't forget, at the beginning of the stream here, I gave you guys some links where you can follow us along on social media, as well as jump on the newsletter, the free newsletter. Been predicting things pretty good through that. But we are going to have that new newsletter coming out as well, which is going to talk specifically about trading psychology, trading tips, tricks, and techniques, trading strategies and systems. We're going to be outlining them in that. Man, oh man, it's going to make you a better trader if you want to pay attention. So be following us on social media, and as soon as that's out, we'll let you know. It'll be on Substack. And then I'll let you know, and you guys can sign up for that. And again, it's going to be a bigger, generally it's going to be a bigger explanation of what I'm doing in the threads. And that's going to come along with YouTube videos that I'm going to put in it where we're, talking, especially when we're talking about like techniques and things. So I can show you instead of just tell you as well. So make sure you guys are subscribed to YouTube here or on Twitch. Follow me, TX West Capital there on Twitter. Follow me at Texas West Capital on Instagram, Texas West Capital on Facebook. Yeah. Join us. Don't forget, you can get 1 month of Tier 3, guys. Normally $200 a month for $19.99. It's only 1 month. There is no auto renew. And, so once the month is up, it's up. But you can get so much information in that month, guys. It's just stupid how much information you'll get. Other than that, we do have our mentor program going. If you want to be the absolute best trader you can possibly be in this next year, you need to join. How much is it worth to you to become that trader, guys? We have financing options on there. If you don't have the cash up front or whatever, we do accept cryptocurrencies once again now. We got that working again. So, man, the only thing holding you back from becoming amazing this year as far as a trader, and hopefully if you're with me in life, is just you. That's it. We'd love to have you guys with us. And always remember, the only thing you control in the market is how much you lose. So please keep working on risk management, okay? You guys are great. I appreciate it. Hey, I'll be back on Tuesday, 11 a.m. Central Standard Time. So hopefully to see you guys checking in. Take care.